was AI that created the opportunity for us to buy Google at an attractive price. Basically, Microsoft and OpenAI had a very powerful demonstration of and a launch of a new product, and then Google's kind of launch, or it was a bit of a disaster. Stock got crushed on the basis of fear that Google was way behind in AI, and their advertising franchise more than covered the value of the company, and you got whatever they were doing in AI, if you will, for free.
Billionaire activist investor Bill Ackman is making some of the biggest returns of his career. And the biggest driver in his concentrated portfolio is his recent position in Google. In May of 2023, Bill Ackman's Pershing Capital took its first position, roughly $1 billion in Google parent Alphabet. Since then, they have doubled down on their position and have nearly doubled it to $1.8 billion. And since then, Google has been on an incredible run. Let's first understand Pershing's reasoning for taking this position, and then we'll take a look at Google and see if we think that it's still a buy today. Back in December on a discussion on the David Rubenstein show, and we only get about a minute of his analysis on Google, which we showed a majority of it in the opening clip. That's because he was pretty preoccupied with putting university presidents on blast, but that's a different talk show for a different day. But to better understand Pershing Capital's thought process on this, we can go into their annual report and see their investment thesis on Google. In this letter and in the interview, Bill mentions that, in essence, the market was rewarding Microsoft for their investment in OpenAI and overly punishing Google for being late to the party. And this is a little bit of an aside, but perhaps Google has been appropriately cautious to not introduce a new set of technology before it's ready. In a recent interview with Wired, Google CEO Sundar Pichai mentions that people use our search for very real questions, like how much Tylenol should you give a 3-year-old? That would be a really big deal if the AI hallucinated on that. Regardless, the first thing they mention after their take on Google AI position was mentioning that Google is a dominant leader in the digital marketing space, and they basically have a monopoly on search. They even sum up that they have a 50% hold on global digital marketing. They praise Google's cloud offering as a top 3 player. GCP broke into profitability this year, and that they expect to see margin expansion, specifically to start enjoying AWS's 30%. They entered their position at 16 times forward earnings, which for fun, it's trading at 21.5 forward earnings right now. Okay, that provided a good bit of context on why Pershing Capital took their position on Google. But since then, the stock has popped pretty significantly. So let's take a quick look at where the company stands today and see if we want to open a position. If this is your first time doing analysis with us, welcome. Believe it or not, there are just 4 steps to doing sufficient due diligence on a company. These are simple, but they are by no means easy. First, you need to understand the business and how it makes money, and how it will make more money in the future. This is actually the hardest step and definitely takes the longest time to complete. Second, you need to understand the company's economic moat or durable competitive advantage. I really enjoyed doing this step because it's fun to think about competition and various moats. Third, you have to evaluate management. You want to make sure that they are good and honest people. Fourth is coming up with the intrinsic value of the company and making sure you apply a margin of safety just to make sure that if your valuation was incorrect, you can still expect some upside. It usually takes me a couple of weeks to go through every step in this process. Just as when I buy a new piece of real estate or if I buy a new expensive electronic device, I do a lot of research, and you would too before you buy something. And it shouldn't be any different with stocks, right? I think this is the right way to do it. If we were buying private businesses, we'd be doing a ton of due diligence. I've been on the buy side of private transactions in private equity, and it takes months to complete due diligence, and you have to throw an army of accountants at it. Why wouldn't it take any longer in the public markets or with individual investors? The only difference is we don't have to send in that army of accountants in order to validate the data. The SEC makes sure that companies are reporting as accurately as required by the law. This, of course, isn't perfect, but that's for a different day. Anyway, all that to say, we won't be completing the 4 steps in this video as they take far too long, but we can get through step 1 because I've done a lot of that work already. And so let's go. So to start step 1 and begin understanding the business, and I normally start with reading the company's most recent financial report. namely in their section 2, but I like visual layouts, so I took the time to develop this infographic that I can use to help illustrate these points. You don't have to do this by any means. Okay, this is Google's most recent annual report. You can see that I've marked it up a good bit. It's just something that I like to do, and I publish that on our Discord, so if you like the information in here, then feel free to check out our Discord. Okay, to get to how the business works, you want to go to the annual report, which is shown here, and then you want to go to Part 1, Item 1, and you can see that they have 2 major business units, and the first one is Google Services, and the second one is Google Cloud. And all of these words, and you can see kind of the writing I've done, all these paragraphs will show you what actually comprises these businesses. So we'll go into the actual drawing now. If we open up our cheat sheet here, we can take all of the words that were in that section and apply it here. So you can see the 2 business units, Google Services and Google Cloud. And then this is drawn to scale. So you can see that they had about $253 billion of revenue in 2022. And you can see that almost all of it is from their Google search. And then the second biggest contributor is their Google network, which is how they deliver advertisements across the web. Next is YouTube. And then the 4th largest contributor to their revenue is Other, which includes their Play Store purchases and hardware sales. And then Google Cloud, and then their other bets. So that's how Google makes money. Once we understand how a business makes money, the next step is understanding the business to make sure it's financially healthy and verify how it will continue to compound well into the future. So for financial health, I'll be honest, they have a bulletproof balance sheet. On their income statement, I have some concerns with how they've been tracking income, but that's from them investing in other bets. So as expected with a blue chip tech stock, they are extremely financially healthy. They could cover all debt with the current cash on hand a few times over. So let's talk about their ability to continue to compound into the future. I think everyone knows where this conversation is going to head, and it has to start with AI. My own personal take is that OpenAI has first mover advantage, and that is a huge advantage in software, especially because OpenAI is so much better than Bard, even a year after, or anything Google has had to offer so far. So until we see something really different, other than a somewhat misleading AI presentation that was actually pre-recorded, we need to see more proof before we can understand that they will be able to win the AI race. There's no denying it, they easily have the world's greatest data set to train an AI on, but we have to start seeing this proof, and to see if it's big enough to defoot OpenAI, which I think will be a monumental effort. Revenue concentration, especially when a company is as big as Google is a scary thing. And there's little revenue diversification here, as we saw on the infographic, as they remain heavily dependent on Google search and the state of search advertisements, which many users of Google are reporting that it's getting worse because AI bots are running around putting out way more information. Another thing is the legislation around their App Store. Basically, a jury found that 33% fees on App Store purchases is too high. This isn't something that's too big to worry, as it's less than 5% of their revenue, so I'm not really worried about that. But the last thing that could impact Google's future cash flows, and I think it's really underreported, is Waymo. The global ride-sharing market is a $165 billion business, and Waymo today is carrying passengers in driverless vehicles in California and Arizona. So I'd love to hear from someone who's actually taken a ride in one of these. Please let me know in the comments if you've driven in a driverless taxi. But this moonshot could be a great way for them to find and grow future cash flows. Perhaps if they don't dethrone OpenAI, but Waymo ends up having a huge leg up, then they could still grow. What do you think? The next step in the analysis here would be going to their competitors. Tesla is fighting hard in driverless taxi space, but is not getting the industry approval to operate driverless cars. And OpenAI and Microsoft are formidable opponents in AI, and this would be a fun competitive analysis to look at. So if these are things that you want to see, let me know, and I'll make another video covering the competitive strengths of Google and continuing this analysis. That's all for this video. If you enjoyed it, please like and subscribe. We'll see you next time.